All right, welcome to episode 2 of the Business Credit Playbook. We've been excited to make this series because there's so much information in here, and we're hoping that's extremely helpful. Can't wait for the series to be done. If you're just tuning into this video, welcome. Today we're going over how to build a profile that deserves high limit approvals. This is part 2 of a 3-part series. If you haven't watched episode 1, talking about optimizing your credit, I recommend going to go watch that. We'll add a link in the description below and a card above. Let's jump into this one. So, how to build a profile that deserves high limit approvals. Structuring your financial presence for top tier funding. We're going to move forward beyond just the approval and into positioning. Positioning is a very, very important part when it comes to getting high limit funding or getting qualified for the highest limit of any product from a major bank, credit union, or financial institution, even if it's a regional bank. You're not just applying for a card, you're building a relationship with that bank that can fund you for life. And so in today's presentation, today's lesson, we're going to understand the 5 pillars of credit positioning. We're going to see how to align your business identity with the lender's expectations. That's a huge part. Banks, their job is to manage risk. And so everything you do for your business, you should at least have an arm or structure your business for long-term funding if you plan on being in business for a long time, right? And you're going to learn how to evaluate relationship depth and financial behavior, as well as build a timeline and application plan that earns larger limits. I talk to clients every single week, entrepreneurs and business owners every single week. Some of them go out and they qualify for these products, but they don't qualify for the highest limits, and positioning plays a big part in it. So we're going to talk about that. My name's Austin. This is my wife, Susie. We run this channel. This is our business. We're parents, we're business owners, we're Bible believers. We love helping entrepreneurs access 0% interest business funding. And on this channel, we show you how to unlock high limit business credit cards so you can grow and scale. But we also talk about any type of alternative funding method for your business, revenue financing, term loans, whatever the case may be. But we talk a lot about business credit cards because they're extremely useful for brand new startup businesses. So if you're interested in that, consider subscribing. Even liking this video, it helps get to the right people and move us in the algorithm. So let's get to the lesson. All right, good credit gets you approved. Positioning gets you funded. This is huge. This is huge, right? We talked about in the last video how to get your credit looking pristine and attractive to banks. But just getting approved is half the battle. You want to get approved for the maximum amount, right? So the approval mindset is you just asking questions. How do I get the card? How do I improve my score? You're just thinking short term when you're thinking quick product versus how do I become the bank's ideal client, right? If you think in this mindset of positioning mindset, you not only are going to get approved and qualify for the card, but you're also going to put yourself in position to get approved for way more products that they have down the line, especially when we're talking about major banks. To give you an example, Citizens Bank, they have 1 business card versus Chase Bank, they have 4 business cards, they have business lines of credit, they have auto loans. So the more that you're a friend of the major banks and you position yourself well with them, down the line, if you need more funding or if you need something or a product from them, you're already in good standing and you have a higher chance of getting approved for that. A lot of people have great credit, but if you don't have the relationship with the bank, they don't know you and they are weary. So your mindset wants to be, how do I become the bank's ideal client? Focusing on relationship and trust, right? If you're thinking long-term funding strategy, you want to build, you want to have a full banking relationship, not just business credit cards, but lines of credit, loans, whatever that may be. You want the bank to trust you so they'll continue to increase your limits and offer you new products without you asking. And that's happened to me. I'm a living proof. We have a great relationship with Chase. I have everything Chase could offer, business line of credit, whatever they offer, because I have a great relationship with them. And that's what I want to teach you. And how to position yourself is how you build that relationship, right? So here are the 5 pillars of positioning. First one, relationship depth. We're going to talk about that. How deep does your relationship go? Number 2, your business age and legitimacy. This helps. This is all positioning. This is nothing to do with your credit. Liquidity and cash flow, right? The money you have in your account. How does it move? Personal credit health, making sure nothing bad happens to it. Derogatories, things like that. That helps position you. And then application strategy and timing. That, honestly, we're not going to cover too much of it. We're going to gloss over it because we're going to do a deep dive on execution in the last module of this presentation. So these 5 pillars, they work together. If you miss one, your foundation weakens a little bit. If you master them, you'll see limit offers that only people hear about on Reddit, right? And we are a living testament of that. We've had clients that get $75,000 limits on Chase Business Unlimited cards, but it's because we optimize their credit and we position them. So you're going to learn that today. Let's dive into it. So relationship depth, right? You need to open up a business bank account. So many people that I know, they open up a business bank account or they apply without opening up a business bank account, and they're trying to figure out why Chase denied them or why they didn't get a huge approval. Or they open up a business bank account, put $500 in there, and then apply the very next day. Dude, that's weird. You need time. You need time for the season. They need to get to know you. The bigger the bank, the longer the courting process. You guys are dating. You need to take your time. You need to show them that you're somebody worth giving a lot of money to. So you're going to open up a business bank account from whatever bank that you're hoping to build a relationship with. All the major banks I have accounts with. If I'm looking for funding from them, and I've opened up those accounts 6 months in advance. You put money in that account as much as you possibly can. Make it your main account. Fund it immediately and maintain activity. Don't just let it sit there. Take money out, put money in. Just treat it like your normal bank account. They want to see some money in your account. And also, after you put that money in that account, don't apply for any of their products for at least 30 days. At least 30 days. That's the minimum. The longer you let it sit in season, that's what we call it by letting money sit in the account season, the better you look to the bank and the less of a stranger you look. And then from there, you have a higher chance of getting approved for a business line of credit or credit cards. So the more money you run through that account, the stronger the relationship. And so banks, they reward loyalty, right? They trust customers whose money moves through their system. That relationship data often overrides a regular score. All right, that's pillar number 1. Pillar number 2, business age and legitimacy. You want your LLC to be as old as possible. Now, I wouldn't necessarily go and buy age corps. They are useful. People have them. I don't recommend them because I don't think they're necessary to a certain extent, right? If you're trying to build up your business profile, you want to get some business trade lines, you're trying to go after a big business line of credit, that could work, right? But the best thing is just to have something homegrown. And so what I also recommend is maybe you're watching these videos trying to set yourself up. You're just trying to learn. What I recommend right now, open up your LLC. Start it right now. The older that baby is, the better. So when it comes to business age and legitimacy, you want your LLC to get about 6 months. You only really need it to be 30 days. For business credit cards, but for business lines of credit, you'll need a little bit older. So we just say 6 months to be safe. Also, you want a neutral business name. You want to avoid high risk words like capital, investments, anything that says real estate, anything that shows that you're in a high risk industry, right? I like using venture, enterprise, consulting, right? And then you want the NAICS code to reflect it. Consulting, marketing, professional services, so on and so forth. You want to have a professional address, professional phone number, right? You don't want on the application to say, hey, I'm a real business and I operate out of apartment B. They're going to go, you don't need $100,000. You operate out of an apartment, right? And they're going to check the phone number. They're going to check the address. I would even add to this list, get a generic website. It doesn't have to have anything on it other than the name of your business and a small little contact box. Just all these things make you look professional and legitimate. It's like going to a job interview and you have on a nice suit, right? You wouldn't go with flip-flops. You wouldn't go in a hoodie. You're going to go well-dressed, ironed, not dirty. That's how your LLC and your business needs to look, right? And you need to make sure you have matching details across all of your documentation if you're going to need your documentation. But what we're talking about today is no document loans. So lenders look for stability and consistency. Mismatch or risk flags will drop you into manual review instantly. They're going to want to see docs. And that's what we don't want to do. We don't want to scare the bank because even if they approve you after reviewing you, they're still a little leery. So they're not going to give you top dollar. So keep your branding and your industry generic if you're new, if you're not established. All right. So the next thing is liquidity and cash flow, right? You want to make sure you deposit and balance your deposits and balances prove your management skills. So you want your account to have some money coming in and coming out of it, because you just look like a legitimate business by then. So like I said, you want to maintain steady cash flow and avoid zero balances. It doesn't necessarily hurt you. It just doesn't help you. It's not a negative, but they want to see that there's money in that account. They like seeing inflow and outflow, right? They want to see that. Now, obviously, they're going to look at your net profit. So if you're depositing, $10K a month and you're withdrawing $9K a month, that doesn't necessarily help you, but it's better than nothing. But you want to, deposit 100% of whatever the amount is, and then maybe move around 10%. So, I put in $5,000 in that account, I let it sit, and I move in and out $500 every month at least. But I think a 20% margin mark looks really, really healthy, right? So this is really, really crucial for lines of credit. Like I mentioned, the higher and the healthier your balances, the larger the offers and the safer they're going to feel giving you a revolving line of credit, because that's one of the best products that they can offer you is a line of credit. So a lender is thinking if a business already handles 10K a month smoothly, then they can handle a 30K line. And that's really in line with what we've seen as practitioners in this space. Normally, whatever it is that you're able to manage, banks will feel comfortable giving you about 3 times the amount of that. That's why the more money you put in those accounts, the better. If you can have 100,000 sitting in that account, my goodness, there's not a lot that Chase or any of the other major banks won't offer you, right? So the fourth pillar, personal credit health. This is so there's a couple ways to look at it, right? This is foundational. We talked about this a lot in the first video. It's the foundation for a lot of business credit. You're going to PG until your business is cash flowing. You're going to have to personal guarantee. You're going to have to use your personal credit. You want to make sure you maintain a low utilization. A lot of this is review from the last video. You want to have perfect payment history, no late payments, no derogatories, no collections or charge-offs for anything like that. You want to make sure that before you fund, you always want to keep a 90-day window, right? So if you're thinking about going for, I keep using Chase because they're a great bank. Let's say you're going for the Business Unlimited, Business Inc. Unlimited. But right before you apply for that, if you apply for anything within a 90-day period or window, any hard inquiries on your credit report within a 90 window, do not apply. Wait until you're out of the 90-day window, then apply. Because you risk the chance of overexposing yourself. And if you have that inquiry there, if you overexpose yourself, that just means the bank is going to look at you and go, man, they look a little desperate. They've been applying everywhere. We don't feel comfortable lending to you. I don't care how good your credit looks, right? And every new account that you add onto your personal profile, overall, that account starts off as a baby. So it lowers your overall age of your credit profile anyway. So it doesn't help really in the long run. And then, is like I mentioned, you want to keep monitoring your credit once a week, just to make sure. You never know. Financial institutions, they do things all the time. No matter where you're paying bills. I know clients we've worked with, and student loans popped up in the report out of nowhere. So these are things you just have to be careful of, right? So your personal credit is really important. You're personally vouching for your business, and your profile is your character reference to the bank. So like I mentioned, if you want a deep dive on this fourth pillar, go back and watch the first video in this series. Now, application strategy and timing. Like I mentioned, we're going to dive a lot into this in the next video. But essentially, how we do it is we start with the bureau that has the highest score. We identify the biggest bank of the bureau that pulls from that bureau with the highest score. I've been talking about Chase all video. So I'm going to look at if your experience score is the highest, then I'm going directly to Chase. I'm going to identify that bank, and then I'm going to apply to all the other target banks that pull directly from Experian, like PNC, Wells Fargo, things like that. And this is what we call a funding stack. And then we're going to sequence your application, starting with the top tier bank first, because they have the most money. If you're going to waste a hard inquiry, if you're going to go hard, you're going to go hard on the big banks. And once those are all done, then you're going to go down to the credit unions. And this is after you've already positioned yourself. You got the accounts open, you're doing all these things. You should be ready to go and apply. And then after you're done applying, like I mentioned, 90 days, let it cool, and then double back. This is the best strategy that we've seen. Now, if you're targeting banks that pull primarily from one bureau, you can keep applying and hit all those banks in all 3 bureaus, and then pause for the 90-day window. But this is something that we teach our clients in our program every single time. So the timing and the sequence can be a big determining factor on the limit that you get approved for. If you get this wrong, you could get approved and only get 10K. If you get it right, you can get approved and get up to 40K. So it's really advantageous. So other things to keep in mind outside positioning that just strengthen your profile: installment loans, auto trade lines. These look good. It makes your profile look a little bit normal, natural, beefier. You don't want just all credit cards. You want some other things on that profile to show that you can, that you have a well-rounded, kind of like having a plate of food, just having all meat on it looks a little weird. Like, have a little bit of veggies, have a little bit of starches, some carbs, right? Also, before you apply, request some soft pull limit increases if the product or the cards that you have allow that. That's just an easy way to bump up your profile a little bit, to add overall to your overall credit limit. You want to keep older cards open, right? You don't want to close any old primary accounts. Even if the card has an annual fee, do not close that account if it's 5 years old. If you lower your credit age, that will backfire big time, and you'll need like an authorized user trade line again. Like I mentioned, never open new accounts within the 90 days of funding applications. So strong profiles plus strategic positioning equals top tier funding. High limits, they come from patterns of trust, not just scores. Then banks will see you safe. That turns you into a long-term partner. And then just in general, credit is a relationship game. Play it strategically. This is why we're focusing on the depth and positioning and why this 3-part series even exists. Well, I want to teach you how to get banks to trust you. So if you're interested in this, you're like, man, I've been learning a lot. Please like this video. But if you're interested in learning how to secure high limit funding for your business, whether you're new or just getting started, or if you've been in business for a while, click the link below that says work with us. We would love to have you fill out an application, hop on a call with you, give you a consultation, see if you're a good fit for our program. And then we can help you walking through all the steps in this course, and we can kind of help you reach your goals. And so we'll be excited to do that. Moving forward in this series, be sure to click the next video. We should have it somewhere on the screen. The next video is episode 3 of this Business Credit Playbook course. We're going to show you when to apply, how to stack funding offers. Like I mentioned, talk more about the application process, timing. All of it will be about execution. So taking your position profile and your good credit and turning it into real approvals, the highest limit approvals. We appreciate you sticking out. We hope that this video is giving you some food for thought and it's helped you in some capacity. If you have any questions, leave them in the description below and we'd love to answer them, or shoot us an email. Other than that, we love you guys and we'll talk to you soon. Take care.